Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 10 minutes to 1 PM on Monday the 22nd of March 2021 and we're going to spend the next few minutes looking at Tesla. Right then, we're going to do as we always do on this channel. We're going to start with our basic analysis first and our Elliott wave analysis second. But before we begin, just in case you're new to the channel, let's give you a quick rundown of the chart. First things first, we have our Elliott wave count on the chart here, which is all the numbers and letters you can see. We're just going to hide that out of the way so we can explain the rest. We also have 4 exponential moving averages, a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side here showing the peaks and troughs of the buy-sell volume, with the extreme of that peak being represented by the yellow dashed line here, which we call the point of control. We have an RSI set to a 10 close, with a green 30 level representing oversold and a red 70 level representing overbought. We also have a MACD showing short-term and long-term moving averages, 10 for the short, 20 for the long, and a 9 to smooth. Right then, what can we see here in the weekly time frame? Well, in my previous video I called it 5 waves down because we had a clear 5-wave impulsive structure to the downside. We'll talk about that in that Elliott wave count in a little while, which suggests that we're either working on a zigzag into an ABC or a 1, 2, 3, 4, 5 down. There are 2 options because we've started with a 5-wave structure rather than a 3-wave structure like we would in a flat pattern. So basic analysis, we are still below, we closed last week below the 10 exponential moving average, body of the candle below the 20, pre-market is currently trading at 680.05, which is above the 20 exponential moving average, still well above the 60, still well above the 250, the RSI has us in the neutral zone between 40 and 60, and the MACD has us continually building up bearish momentum here in a series of red bars in the histogram, with a short-term moving average having produced a sell signal on the weekly time frame on the bar of the 16th of February and continuing to thrust lower since and accelerate away from a longer-term moving average, which is this sell-off we can see here. So that's the weekly time frame. Let's come down to the daily time frame. See what we can see, just alter the chart. We are working on arithmetic scale here, not log. If I'm working on a longer time frame looking at more of the price data, I would be working on log scale with Tesla, just because the volatility of the stock has had us move so far so fast that it looks kind of ridiculous if you look at it in the long term and arithmetic scale. But we're only focused on the short term here, so it works perfectly well. Now on the daily time frame, below the 60 exponential moving average, below the 20, below the 10, closing last week on the Friday, pre-market currently above the 10, below the 20 and the 60. So we are going to open higher today by the looks of it, unless something changes within the next 40 minutes. We will be opening higher. So we have had the 10 cross over the 20 and the 10 and the 20 cross over the 60, with the price below the 20 and the 60 at the point that it occurred. This is fundamentally bearish, suggests that although we've got a bounce, it's a temporary bounce before heading lower, and that generally there's been a shift into bearish momentum over the last couple of months. So, and of course I've been bearish since topping here, and then we've now seen 5 waves down, so I'm expecting 3 waves up and another 5 down. We could push higher above this in the short term, create a bit of a bull trap possibly, getting clear of these, bringing in some extra money before selling off. They're in the neutral zone between 40 and 60 in the RSI. We've had this little spurt of green bars on the histogram on the MACD, with the short-term moving average crossing over the long-term moving average, giving a short-term buy signal here. This was potentially deceptive because we've got this crossover right at the bearish candle here, which is a bit of a rejection candle after wicking through 60 exponential moving average on the daily. We've then got rejected, but then we've since come back up to a lower high, fallen down again. So we need to look into this a little bit, but we're not going to get too complicated until we see either another thrust down invalidating a previous high here, or we see a thrust up taking out this high here. We should get confirmation this week, I would have thought. So nothing else to really talk about here at the moment on the daily time frame, so let's bring up our Elliott wave count and see what we've got so far. So nice and simple, let's go full screen. I've got 5 waves down complete, like so, 1, 2, 3, 4, 5. So this is either a wave 1 of 5 to come lower into an A, then a B, then a C, or it is the first 5 waves into an A. Okay, that's the way I'm looking at this. Because we've started this with a 5-wave structure, an impulsive structure down, then we are either looking at a 1 or the A of a zigzag, which would be a 5-3-5 structure. A flat pattern would have began with a 3-wave structure. I don't think you can interpret this as anything other than 5 waves, to be honest. I can't see you interpreting this as 3 waves, so we're calling this the start of a zigzag. So if we have 5 waves down, then we're going to expect 3 waves up. Right, and I would argue we haven't got it yet. We've got 1, we've got 2, so we're looking for a 3rd wave up. That's how I'm feeling about it at the moment. It's possible that we've already completed the correction here and we're now selling off and going to come down lower, but I see no impulsive structure developing here to suggest the start of another 5-wave leg down. So, and I feel that time frame wise, this sudden move of 3 days back up, this would be too quick to correct this initial move down. A more drawn out correction back up before coming down would fit much better. We have come up exactly to one of the 2 markers I put on the chart last week. I put the 50% retracement up at 719.51, and I put the 61.8% Fibonacci retracement up at 761.04. The price so far has come up to the 50 as we would expect, and it's found resistance there as we would expect. So straight up to the blue bar here at 50% at 718.96, and ping, hit it, and then immediately get rejected, come back up lower, come back down. So this looks like basically from here, because we've gone down lower high, lower low, this looks like a 3-wave move in itself. In the B wave, B wave can be any form of corrective structure. So if we have done some kind of low, a lower high, lower low, that would be a 3-wave move, and then we should expect to see 5 waves up in the C. Okay, so that's what I think is coming next as part of our 3-wave move. That's what I'm leaning towards myself. I mean, there's nothing stopping you. If you saw this, you could have got in short at the 50, I guess. We haven't come back to invalidate your short position, but if you are short, having gotten in at the 50, then you really have to treat the 50 or the area just below it if you don't want to get out. If you don't want to get nipped out at the loss. You're going to have to create that as your cut-off point in the short term as you stop, because if we come back through this high, then we're probably coming up in the 5-wave. We're very likely coming up in the 5-wave structure to complete a wave C. And that would be a much better shorting opportunity for the long term once that completes. So let's just come down to the 2-hour now, so we can get a bit of a better look at this structure. Ugly bit of mess this is really here. We can see that the 250 exponential moving average, which is the big long green line here, has played a significant role in backing up the 50% retracement on this 2-hour time frame. You can see it's operated as a serious resistance. So yeah, this looks like 3 waves into a C to me here. I'm sure if we come down again, you could probably find the 5 waves in this C. We have got we've got a gap here. That would likely be a 1, 2, 3, 4 here, into a 5, into a C on the minor time frame, into intermediate A, and then we're working on this B wave here. Sideways chop. Probably maybe since we set a lower high. If you see what I mean, here's the high we came up at 716. We've come down, come back up, set a lower high. We're coming down again. So this feels very much like probably a double combo, a free structure that we're developing here in the B, maybe a double combination. And if that's complete, I've got it labeled as complete. We can't be sure it is complete yet, but we want to see 5 waves up on the smaller time frame, 3 waves back on the smaller time frame, and then so on until we get our 5 waves up. Could stop at the 61.8 here, could push higher to parity, excuse me, which is this white line. Now, obviously, this parity at 804.35. This is the length of A projected from our current bottom of the B, but we don't know if this is the bottom of the B yet. We can't be sure about that. So projected from where it is, it takes us beyond the 61.8. It actually takes us beyond the 707, but just short of the 78.6. If I just show you quickly. Yeah, so here's the blue line, the 786 at 822.11, and here's the 707 at 793.60. It's somewhere in between the two, so maybe a little bit further down. Maybe this could be an A. Could it be A? 3 waves into a B, and now we're going to work 5 waves into a C of the smaller time frame B. Get a little lower and then push back up. It's a bit too choppy to call that at the moment, to be honest. So I'm not going to. Right, so let's just see what we've retraced of this initial A move. That's also a measurement we should be looking at. So B wave retracement has come straight to the 50. So strong 50-50 relationship here. 50% back up of the initial move down, 50% back of the initial move up to the 50. Didn't quite make the 61.8, so maybe we've done enough. But for a B wave, that's a pretty decent, pretty normal retracement to retrace 50% of the A. That's what I'd expect to see. So yeah, for the moment, guys, I don't really know how to label this at the moment. I'd have to dig in here on the smaller time frame, which I admit I haven't, but it looks like a bit of sideways chop, maybe a double combination here. Let's just have a very quick look at it. I don't want to get stuck trying to figure this out. So what can we see? What can we see? Is this a 5-wave move down? You could go 1, 2, 3, 4, 5. A, B, C, maybe. And then 1, 2. No, this is 3 waves all day, this isn't it? This move here. Bomb, bomb, bomb. That's got 3 waves written all over it. So you could probably say, let me think about this. 1, 2, 3. 1, 2, 3. 1, 2, 3. That would give you a WXY double combination. So maybe we're looking at a series of 3 wave structures to form our B wave. Maybe it's done, maybe it's got a little bit lower to go. Either way, the overall pattern, I'm not convinced is over yet. But it's up to you. Obviously, you take on the amount of risk you want to take on. If you want to short it from here, I think you have to treat that 50% retracement as you stop or just beyond it. Because you're late getting in now anyway, because you didn't get it to the tick. But if you were, then you'd have to probably consider that. I personally feel that we're going to push a little higher. I think it doesn't look complete. This looks like 1, this looks like 2, and we're looking for that 3rd wave up, right? So we're looking for 5. If you want to short it from a higher level and you're willing to be patient and not take on the current risk of trying to short it from here, then really all you're looking for is you're just looking for 5 waves up from here, okay? Ideally around the 61.8. Check the subwave structure that you get the 535 on every time frame or as close to it. We're looking for 5 waves up into a C. Could come to parity from where we are at 804. Could come to the 61.8 at 761. But we're looking for a completed 5-wave impulse up to complete the C. And then once we come to one of these significant retracement points, that's a safer place to short it from, because if you want to get in on the longer time frame, the closer we get back to the top, I've said this before obviously, but the closer we get back towards the high, the safer you are if you want to get in short, because you can treat the high as your cut-off point as you stop. Not quite high enough up to give me that level of security at the moment. Like I said, if you've come in off the 50 short, then really any move higher should be above this, should be a stopping point, because we don't know how deep this is going to be. Okay, if this is an A, this is the B, we could come all the way up to just shy of the top. I wouldn't expect it to be that deep because we've had a 5-wave move rather than a 3-wave move. So a flat pattern, I'd be like, yeah, all the way back up, all the way back down. You could expect to see something like that. It's not going to happen all the time, but it's more likely than you would see in a zigzag, where you'd expect to see zippity zag like that. Down 50% to 61%, back up, down again. The only other way of potentially explaining a much deeper retracement towards the highs would be that this is just wave 1. So you've got 1, 2 could bring us all the way up to 99.9% and still be legal, and then you go 3, so on and so forth, 4, 5 into an A, and you're looking at a multi-month or longer, year or longer correction for Tesla in a big cycle wave, corrective wave structure. I guess we won't know until a few more days and a few more weeks go by. But for me, I'm going to leave it there, guys. That's enough chit chat. I'm in danger of waffling if I carry on any longer. I'm just looking for a 5-wave move up from here, or a further move down to complete this correction, and then we're going to come up higher, and then I'm going to get back in short. If we come all the way back down here, we invalidate the high of our little minor wave A here at 620.44, and then come even lower and take out the previous low at 538, then I've got to change my mind and say this was completed. And you have to play the breakout trade rather than a retracement trade, because you were being too greedy, waiting for a better place to short. A break of that low would be confirmation of 5 waves complete, 3 waves up, and we're back into another 5 wave structure down. But I can't see it from here myself yet. This does not look impulsive to me. You know, the move here, this does not look like a 1-2. Maybe you could argue 1-2, 1-2, 1-2. Then we're going to come into a 3. If that was the case, you're going to get an acceleration down this week. Maybe that could convince me we've completed the correction, but for the meantime, I'm expecting to see a move up to complete the C. Right, so we'll call it there, guys. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, leave us a comment, let us know what you think if you want to, and feel free to share these videos. And I keep forgetting to say this, but hit the bell notification icon as well, so you get informed of future video releases. Alright then, guys, take care, and that's a video for today. All the best. Bye bye.